Yo, what's up you guys? Welcome back to a new video, and in today's video we're going to do the usual weekly market breakdown, dissect the NFP data. I'm also going to speak about exactly what that means for the dollar index. We're going to look at the index, we're going to look at the Nasdaq, Dow Jones, Euro USD, as well as gold from a technical and a fundamental perspective. Now, without any further ado, now you know it, and as well as I know it, and everyone else who blew their accounts on Friday would know it, that we had the NFP data that came through on Friday. Now, the NFP data, if you don't know, is a non-farm payroll, basically giving us an indication of how many people that is in the private sector. You see, it says non-farm. Okay, people that this excludes people working on the farm, but it basically gives us an indication of how many new jobs were added in that sector for the US. Now we can see here the Dow Jones' anticipation was 228,000. However, the market came through slightly higher with 236,000, making it the third time in a row now. The third time in a row now where the US has added new jobs. It's just, I just hope so. South Africa are sitting there going, okay, what are you guys doing? I'm not sure if they're doing that, but they should. Then we also had unemployment that came through at 3.5%, which is the talking point of exactly what it is that I want to discuss. Now, the fact that the unemployment is coming down again is an indication that the Fed is probably more likely to aggressively hike the interest rates for next month. What that means is now we can shift our bearish sentiment for the dollar to bullish, because now we obviously expect the market to react of that. Because why? In order to tame inflation, the unemployment rate should not come down. If it comes down, it means that the Fed is doing something, it's doing something that they are supposed to be doing. But that is not, because if the unemployment is coming down, that means that more people are getting jobs, and that's not what is supposed to happen. It's supposed to be the other way around, right? It's supposed to go up. The unemployment rate is supposed to go up. More people should be unemployed, not less people, because more people getting work means that the economy is not slowing down, so the Feds won't be able to get to the rate target that they've set for themselves for the end of this year. And that gives us an indication that we can expect a bullish dollar in the short term, and you'll see how that lines up with the technical analysis there as well. We do have, however, got the consumer spending index that's coming through on the 12th of April, which is going to give us a further indication of exactly where inflation is. Now, with this number, I do expect inflation to come through higher, because that means we now have more people that has been employed, because unemployment is like it came down. Like, it's not supposed to come down, it's supposed to go up. If it goes up, it shows us that we're making progress. But I do expect the inflation to go up based off the data that we received there. We also got the Feds coming through. It'll be good to hear what Powell's going to say based off the latest job report. He's probably going to say, because of this, we have to hike interest rates higher than we anticipated the last time. We got a quarter basis point last time. We could probably get half a basis point, or 0.75. You never know. Then we got some core retail sales. We got some sentiment, consumer sentiment of the University of Michigan. So we've got some very important data coming through next week. Monday, Tuesday, very quiet. Now, the first article we are going to go through is from CNBC. It says here that safe haven gold eases on its way to a weekly rise on economic whoosh. Now, I'm not sure why you would perceive that information, because why it is good that the dollar index is obviously is considered a safe haven, because investors like to put their money in there when things are not looking too good for the dollar index. But that is how the price of gold has been chased up and down the entire time. So basically, the first thing that we can see here, let me just make this a little bit bigger. There we go. So the first thing that we can see is, gold obviously has some clearance further to the upside, as we can see in the short term. But in the long term, I do expect a very deep correction to take place on gold. Gold had rallied this move to the upside, and that's probably just because of the jobs report that we got last month for the index, which indicated a lower CPI. Also, we saw unemployment going up, which was also another good thing to see. But this week around, all the price action is basically aligned. However, before we get this pullback, we do expect that to happen. It says here gold prices prepared some gains on Thursday ahead of the jobs report, but bullion was still on track for weekly rise as weekly US economic data spurred what is of a slowdown. Okay, it says here gold was up more than 2%, surpassing the key level of $2,000. It says here the US Federal is in a bind as higher interest rates could trigger a recession, but a pause in the monetary tightening risks embedding inflation with either scenario positive for gold, said Paul Wong, market strategist. Well, Paul, you could be wrong. Okay, Paul could be wrong. Paul could be wrong, but you will not be wrong for hitting the subscribe button, because I do provide valuable educational content on a daily basis. Next up, we've got the S&P 500 futures. Says here the S&P 500, everyone's favorite, and the Nasdaq. The S&P futures and Treasury yields gain on Friday as March labor report shows resilient economy. Now it says here the S&P 500 futures and Treasuries increased on Friday during a holiday shortened trading session after March jobs report showed a resilient economic and moderate inflation. S&P was up 0.25, Dow Jones 55. The Nasdaq was just sitting there going like, come on guys, I had my fair chance here as well. Okay, so that is it. If you want to read more about the news articles, you can come to CNBC. Now we are going to start with the dollar index. Now firstly, we're going to do it from the monthly all the way to the daily. Now here on the monthly time frame, firstly we can see that gold, there's two scenarios. So the first thing is that we can see how the DXY is currently trading at support. Now support had currently held there as well. We had this massive impulse. After an impulse, you expect a correction to at least the 0.382, and if you take your Fibonacci from the high to the low, we can see that the dollar index had not come and hit that 0.382 yet. If you do take it on this leg here, then yeah, potentially we might have hit it over there, but I do expect the dollar to pull back first before we see a continuation, any further continuation to the downside, because this is a very strong level currently for the index there as well. If you go on the weekly time frame, what do we see? Now from a weekly perspective, it's clear that we could potentially see this is the sort of a what we see over here is we can see that the market had rejected support after the NFP data was received. So I do expect a short-term correction, at least if we do need to see a continuation, perhaps, because what we have over here is the market had printed this information. After the information, you expect to pull back to the neckline before a continuation to the downside. So that is what I'm saying, is that I do expect the index to continue slightly higher going into next week before we pull back to the downside. Next up on the daily time frame, what do we have here? Now what do we have? We've got a market that has just broken below support. Okay, came back to test it as resistance. As you can see, support got broken, came back, tested it as resistance. We also have this level of support over here. If you are looking for a buyer's outlook on this index, what we need to see is that we need to wait for the market to break above that level. Then on the retest, we can start looking for a continuation to the upside for the market to go and complete the information to the neckline as we identified from a weekly perspective. Now gold without a doubt still has some clearance to the upside, so I'm not going to still spend too much time on that. The market printed a massive impulse, so after an impulse you expect a correction, and the best way to do that is to take your Fibonacci from the high to the low of that impulse, and you can see we do have a 0.382 pullback that's lining up perfectly with that structure. The structure also acting as a level of support. The market had broken above this level of resistance, came back, tested it as support. Definitely expect that continuation to the upside, potentially a deeper correction before we see the market move any higher over there as well. Next up, we do have the Nasdaq. Now the Nasdaq, like I said, the last time I did the breakdown, the market was at that level. I explained all of the reasons why we could see that pullback, and then from here we could potentially start seeing a continuation to the upside. Now if we start on the monthly time frame on the Nasdaq 100, what do we have? Now on the weekly time frame, we can obviously see that the market had just completed a W formation. After a W formation, you normally expect a pullback to the neckline before a continuation to the upside. So I do expect a deeper correction to take place on the Nasdaq. Alternatively, if we do get a daily close and break above the price action, which we are going to get to, then we can potentially start looking for longing opportunities over there. Here on the weekly time frame, what do we have now? From a weekly perspective, we had a overextended W formation. After an overextended W formation, you normally expect a pullback to the left leg. Now we didn't get that yet. We can see the market came back, but it didn't give us exactly that yet as well. But we also got a potential clearance to the upside on the weekly time frame there as well, apart from the monthly that we identified only there earlier. Here on the daily time frame, what do we have now? From a daily time frame, we can firstly see the market had broken above this level of resistance, came back to test it as support. Market printed a massive impulse, a correction. If you take the Fibonacci from the low to the high, we came back, tested, and rejected the 61.8 there as well. Now the best way to approach this, we have to be reactive and not predictive. We need to learn to adapt to how the market moves. Now I'm going to identify these key two levels over here. The first probability would be if we do get a daily close above this level, then by all means on the retest we can definitely expect this market to continue higher. If we do get depending on the CPI reading, if we do get a break below this level, then we can definitely expect the Nasdaq to pull back, to break below support, come back, tested it as a resistance, and then continue lower there as well. Next up, we have got the Dow Jones. Now the Dow Jones had not done anything, and you can see here Dow Jones broke below support, came back to test it as a resistance last week. We had the market basically that came in to this consolidation phase that you can see here that it started. Similar price action is expected over here, as it is also a stock, and we need to wait for the market to give us a clear break above this level before we can start looking for long opportunities. A clear break above this level on the pullback, definitely look for a continuation to the upside for the market to go and test that previous level of resistance. Sorry, I have to take a break. Alternatively, what I do see is I do see a clear break below this, and then on the retest a continuation, because this for me on the weekly time frame would look like a W formation. So no, this is not a W formation. What we can see on the daily time frame though is that we had a market also that printed support, broke below support, came back, tested as resistance did not hold. So definitely once again I do expect a correction, although if it's just for the short term, I do think that the Dow Jones is quite overbought at the moment, and it's time for these big institutions to just take some profits. Let me just delete that there as well. So that is the outlook on the Euro USD. Also got some room to the upside to move there. The market, however, broken above this level of resistance, tested it as support. I do expect potentially, again, I don't like to trade, especially when DXY is sitting that close to support. But if this is the case, then by all means we can expect this market to continue higher. Alternatively, I would be leaning more towards this move to the downside. But the best way to be safe about that is basically to wait for the market to obviously break below support, come back, tested it as resistance, and then give us that continuation to the downside there as well. Guys, that is it from my side. Thank you for your time, and as always, cheers for the years.